Hi, this is Alessio. Hope you're well. In this video, we're going to take another look at this important chart here on the major markets. I'm also going to do my best to answer some of your questions. In fact, we're going to take a look at this important chart here and this data, and I'm going to explain to you what the fear and greed index and the dumb money sentiment is likely telling us. All right, guys, join me. Alright guys, welcome back. Now you may remember in the previous video I showed you this chart here, in fact two important charts, the S&P here on this chart and the Nasdaq. And I explained that both the Nasdaq and the S&P have reached critical levels of resistance. In fact, you can see here on the S&P, I mentioned in the previous video on Sunday that we reached this important resistance trend line on this logarithmic chart here on the S&P with overbought conditions here, as we can see on the long-term RSI. By the way, the same thing happened on the Nasdaq. The Nasdaq also reached an important critical resistance level here, as you can see on this logarithmic chart, this trend line here, and overbought conditions on the long-term RSI. And we can see both the Nasdaq here and the S&P have recoiled and got rejected from that level of resistance. You can see the Nasdaq here has managed to pull back. It's pulled back now to the 8 EMA, just under the 8 exponential moving average here, the red line. Same goes with the S&P. You can see the S&P here also has been rejected from that resistance level there. It's pulled back to, as you can see here, the 8 EMA there. That's the red line on the chart. So far so good. I think this could potentially be the beginning of a pullback or a short-term correction in the price. And again, when I say correction, all I mean is a reversion to the mean. And as I'm sure you know, a reversion to the mean simply means a pullback to the key averages, like the 8 EMA, 21 EMA, and the 34 EMA potentially. Again, the more probable level on the chart is the 21 exponential moving average, which is a key level that gets tested usually on a pullback. Now, before I go into that, let me first of all mention a few important things. The first thing is this, that we can see that the S&P, ever since the overbought conditions here, has pulled back the 8 EMA. So in a situation like this, traders who might be short on this market, what they can do is they can actually move their stop loss lower, and they can actually move it to just above the prior highs that was made here, just slightly above the 47.18 resistance there. Okay, that's the first thing, because controlling risk and minimizing risk is the first thing that a trader should do. So that's the first thing. The second thing is that because we're in a seasonally bullish period, because as I mentioned before, the Halloween effect is that the period from the end of October to the end of December is a seasonally bullish period usually for the stock markets. Again, usually we see upward momentum in these months. So in this kind of market environment, I don't think it's a good idea or a wise idea to bet against the market. I actually think there's more risk if a trader bets against the market when you have bullish momentum in a seasonally bullish period for the markets. So I think it's more risky and dangerous to bet against the market and short the market in this seasonally bullish period between October to the end of December. I'm not saying it cannot be done. All I'm saying is it's much more risky. That's all. So that's one thing I want to mention here. We also had a couple of questions from our viewers, from our subscribers. And the first question was this. Well, what happens if the price should, for example, break out above the trend line, take out the trend line to the upside? Now, I should just say, I think that carries a lower probability for now, based on what I'm seeing on the chart and based also on the fear and greed index and everything else going on there. But let's just say it happens. Again, it's an if. But again, the question was, well, what happens if the price should break out to the upside of that trend line? And let's say the price, for example, does this. Let's say it breaks out to the upper side of that trend line. Well, in that situation, if it happens, by the way, then what you have is called a throwover. A throwover is what you see here on this chart. So if you see here on the right-hand side of this chart, let's say, for example, you have a price chart like this that's trending up. And you can see here this was called a throwover. So you have essentially a parallel channel, and the price breaks to the upper side of the channel or the upper part of that trend line and essentially does this, as you can see here. So in technical analysis, a breakout to the upper part of the trend line, if that actually happens, is what's called a throwover, which means there's potentially more momentum and potentially more upside in the price action here. Okay, so if a situation like this does occur and price does break out to the upper part of this channel or trend line, then it's possible to see more momentum and probably a bit more gains in the price. Now, I should just say also something else about this. If a throwover does occur, and let's say the price does break out to the upper part of the channel, be very careful and pay very close attention if something like this happens. Let's say, for example, price breaks out to the upper part of the trend line and then suddenly rolls over and breaks back below it again. So if the price does something like this, breaks to the upside, and then very soon after breaks to the downside again, breaks back below the trend line again, like this, that actually could be a very bearish signal. If that happens, then be very careful in case something like this plays out in the next few weeks. So going back to our chart here on the S&P, let me just pull this back a little bit. Again, if this actually plays out, which I think carries a lower probability, so I'm not expecting it, but let's say, for example, that this actually plays out, and let's say the S&P does break out to the upper part of this trend line, and let's say there's a breakout or a throw over. Let's say we get a throw over as an example. Well, in that situation, what may happen is the risk may increase, and we may see, for example, we may see the S&P pushing slightly higher to the 47.25 to maybe the 47.50 region there. So again, if the stock markets do break that trend line to the upper part of that and we see a throw over, then yes, risk may increase the upside slightly higher to those levels. However, guys, based on the probabilities that I'm seeing here on the chart, I still think that the probabilities are higher for, again, as long as the S&P remains below 47.08, and provided we can take out yesterday's lows at 46.30, if that 46.30 level breaks as well, then the odds I think are in favor of a more general pullback towards a 21 daily moving average here, and possibly even the 34 EMA as well. Personally, for me, I think the odds still favor a bit more pullback, a reversion to the mean. I mean, we've already pulled back so far. We've already pulled back to the 8 EMA. So given the fact the S&P is now closed below the 8 EMA as well, by the way, one thing I should say about this, which you may not be aware of, anytime price closes below the 8 exponential moving average, the red line you see here on the chart, anytime price closes beyond the 8 EMA, like this, the odds increase just over 50% for a move to the 21 EMA. So let me repeat that because it's quite important. Anytime price closes below the 8 EMA, the odds increase for a move to the 21 EMA by just over 50%, which is quite important to know from a statistical and technical perspective. Let me also mention this now on the Fear and Greed Index, which is quite interesting and very important. The Fear and Greed Index is showing to us that right now we've reached extreme greed territory, which by the way should come as no surprise to you. I'm sure it's not surprising at all that right now, given the extreme conditions, overbought conditions we've seen here on the S&P, I mean, it's not surprising we've reached now extreme greed territory. In fact, we can see just a couple of days ago, it was slightly higher at the 86 region here. Now, let me also mention this. This is the money managers' dumb money sentiment here. We can see the money managers or the dumb money out there. They're also extremely bullish. In fact, record over bullishness, as we can see here, among the dumb money sentiment here. So I think given these factors, again, dumb money sentiment among money managers and also among the Fear and Greed Index here, which is now, again, extremely high in the extreme greed territory here. Personally, in a situation like this, I don't like to get over bullish on the market. Again, I'm a contrarian. Being a contrarian at the point of highest risk at the right time has usually been a good idea for me. So personally, I don't like to get over bullish on the market in a situation like this when we're seeing a lot of greed in the market. It does not mean, I want to say this, it does not mean that price cannot go higher. It can. Again, we have to remember price and markets can stay irrational longer than we can imagine. So we have to remember markets can become irrational and they can remain irrational. So we're not saying that just because the sentiment is extremely over bullish and extremely greedy, the price always has to move in an opposite direction. No, it doesn't have to. But all I'm saying is in the short term, we're probably seeing more risk than any potential reward here, especially at levels of resistance with overbought conditions and again, over bullish conditions as we can see here. But for me, I think given the fact the S&P has been rejected from this resistance here and pulled back to the ATMA, and we're not closed below the ATMA here, as long as the S&P can remain below 47.08 here, the odds favor a general reversion to the mean, a pullback to the 21 EMA, the first support, and maybe possibly even the 34 EMA as well. Again, the 21 EMA here is more important, but below that, then the 34 EMA comes into play as well. That's what I'm seeing here on the S&P. Again, we shall see what happens. Thank you very much indeed, guys. I hope this video helps. I look forward to seeing you in the next video update. Cheers. Bye for now.